Okay, Assalamualaikum warahmatullahi wabarakatuh. Hello everyone. Okay, so today my name is Puan Anisa. Okay, so today um I'm going to share with you uh for the topic of BPK 10403 Basics of Accounting. Okay, the introduction on the statement of cash flow. Okay, so for the statement of cash flow, it will be divided into a few parts, whereby I will explain to you on what is the basics of cash flow. So this is in part one. And then we're going to look into the components or the activities that are reported under the statement of cash flow. And in part that is okay. So in part two, so it will be on financing and also investing. And then in part three onwards, it's going to be on operation. And the other two parts, okay, will be on the types of the reporting methods, okay, whether it's indirect or direct method for the operating part. Okay, so now we look at the first part, the introduction to the cash flow. Okay, so what is actually the objective for this chapter? Okay, so throughout all this chapter, okay. So the first objective is for you to know the purpose of the statement of cash flow. Then you will need to know the major classification of the cash flow. So there are three activities actually being reported under the cash flow. Okay. Then you're going to look at how to determine net cash flow. Okay, from the first two activities, investing and financing. And then you're going to look into the operating activities. Okay, so under the operating activities, there will actually be two methods. Okay, the direct and indirect methods. Okay, in calculating the net cash flow for the operating activities. Okay, and lastly is how to prepare the statement of a cash flow. Okay, so we look into the introduction of the cash flow statement. So what is actually a cash flow statement? So in the basic concepts of cash flow, we say that cash flow is actually tracing the flow of cash through a company. Okay, where we want to know where is the source of inflows and outflows to the company. Okay, so tracing the flow of cash to a company is an important part of understanding its financial position and prospects. So we want to look at whether the company is flourishing or the company is having some trouble, okay, in finishing its debt. Okay, so the statement of cash flow is actually one of the four major financial statements usually prepared by an organization. And the statement of cash flow actually shows the performance of a company over a period of time. Okay, so we're going to look at the performance of a company in terms of liquidity over a period of time. Okay, so in the cash flow we are going to use cash accounting. Okay, so we are going to use cash accounting basics and convert it from the accruals based concept. Okay, so net income is an accrual based concept, and this purports to show the long term. Okay, but cash flow purports to show the short term, so we need to convert the accrual basis in the perspective of the cash uh, basis. Okay, the statement of cash flows explains the changes that occur in the firm's cash balance during the year. Okay, so we're not going to use the accrual basis. We're going to look at the cash basis. Okay, because we want to know what is the changes of the cash balance during the year. Okay, so the cash flow usually will report the entity's cash inflow. Okay, usually these are the cash receipts received from the three main activities, okay, operating, financing, and investing, and also the cash outflows or cash payment for the three activities, okay, during the particular period according to the categories of business activities. So we're going to look at the inflows and outflows based on each activity. We will segregate, okay, the inflows and outflows based on the activities. Okay, so what information does the cash flow statement helps user to understand? Okay, so information is then in the statement helps users answer questions such as how does a company obtain cash? So this is reflected in the cash inflows. Okay, so where does the money come from? Is it from the operating activities, or is it from the investing activities, or is it from the financing activities? So how does a company obtain cash, from which source, okay, or from which activities? Then it also answered the question, where does the company spend its cash? So we can see the outflow of cash spending, whether a lot of cash is uh, used, okay, in investment, or whether there's a lot of cash is used in operating or in financing. And lastly, we can see the changes in the cash balance. Okay, so maybe from this period, you can see that there is a deficit, but in the next period, okay, so there is a positive sign, and the cash balance is positive. Okay, so you can actually see, okay, the changes, okay, of the inflows and outflows, and what causes the ending cash balance at a certain period. Okay, so this is actually how the cash flow works. Okay, so revenue and investment, and okay, investment or financing. Okay, so is the cash inflows, and then you have some costs or expenses to pay uh for each business categories, okay, or activities. Okay, so income does not measure an entity's performance in generating cash, okay, especially if the income is measured using the accrual basis. Okay, so in a way, accountants use both the accrual and cash basis. So the accrual basis is mostly used in in the preparation of the income statement, and cash basis is used in the statement of cash flows. Okay, so the statement of cash flow gives a direct picture. Okay, so where we can know where cash came from and where cash went, because it shows because it reports, okay, the receipts and also cash payment of an entity during a particular period. Okay, so the cash flow statement can be summarized, okay, or can be defined. Okay, in a statement of cash flow, it usually summarizes activity over a period of time. So it must be labeled with the exact period covered. Okay, so when we report the statement of cash flow, we're actually reporting the changes of inflows and outflows at a certain period. Okay, so the statement of cash flow must have a title. Okay, so what is the duration, or what is the period that we are reporting for the inflows and outflows? Okay, and it deals the changes in the cash account, much like the income statement, which shows changes in retained earning. Okay, so we're going, after we prepare the cash flow statement, okay, the ending balance must actually correspond with the cash balance in the balance sheet. Okay, so because revenues reported do not always equal cash collected, and expenses reported do not always equal cash paid, so net income is usually not equal to the change in cash for the period. Okay, so you must understand that uh revenues, okay, also includes accruals and prepayments. Okay, revenues and expenses usually includes accruals and prepayments. So accruals and prepayments are actually so accruals is something that has not been received or has not been paid. Okay, so if it's accrued revenues, okay, so it's actually payment that have not been received. Okay, and if it's accrued expenses, it is payment that has not been it is actually expenses that have not been paid out. Okay, so for deferrals, okay, so it is something that you have okay received in advance. Okay, so it does not reflect in the real income when there are deferrals. So because of the inequality in cash collected and cash paid, okay, so the net income is usually not equal to the change in cash for the period because it does not actually report what cash is available. Okay, the position of the cash that is available in the company. Okay, because net income is based on accrual. So we take into consideration, okay, the revenue and expenses for that period. Okay, whether there is a cash collection or cash payment, it's not considered. So that is under accruals. But for a statement of cash flow, we're looking at okay the actual cash that we pay and we received okay in the period. So when you want to prepare the statement of cash flow, usually you will list the activities. Okay, first you will list the activities that increase the cash. Okay, and below you will list the activities that decrease the cash. Okay, so what increases cash is called cash inflow, and what decreases cash is called cash outflow. Okay, and for each inflow or outflow, you have to categorize it properly. Okay, so if this inflow belongs to the operating activities, so you have to list it under the operating activities. If it's related to financing activities, so you have to list it out under the financing uh, category. Okay, so it's the same for the outflow. Okay, so you have to list the inflows and outflows properly according to the categories. Okay, operating, financing, or investing. Okay, so usually in the statement of cash flow, we will report okay the inflows and outflows based on three business activities: operating, investing, and also financing. Okay, so when you list when you do the statement of cash flow, so actually you can see okay so under the operating activities there will be the outflows and inflows, and you will see the net balance okay after the effects of minusing okay outflows from inflows for operating. And then for financing and also investing, it's the same method. Okay, so you will deduct outflow from the inflow for the individual categories and show the ending cash flow or the ending balance, and then all the ending balance will be totaled up to get okay the total cash flow balance for the period. Okay, so when you prepare the statement of cash flow, usually the title will be the statement of cash flow for the period ending, and the format or the formula that you're going to use okay will be cash inflows minus cash outflows plus beginning cash okay to get the ending cash flow. Okay, and this will be and the ending cash flow will reflect okay in the statement of cash flow will be reflected according to the activities okay operating, financing, and investing. Okay, so you have to find okay the net balance okay the net cash balance okay from the for operating. Okay, okay, so this is the inflows and this is the outflows, so you will get the net cash balance. Then for investing, you have to calculate first the inflows and then minus the outflows to get the net cash balance. And then for financing, also the same. Okay, calculate for the inflows and then minus the outflows to get the net cash balance. Okay, so for each categories of activities, okay, you have to calculate the inflows and outflows individually first to get the net cash balance. Okay, before you can get the total net cash balance for that period. Okay, so what is the importance of cash flow to a company? Okay, so usually information about cash flow can influence decision maker. Okay, so depending on their purpose, the internal and external users. Okay, so a company will be in a favorable position if it finances its expenditure with cash from operation rather than one that does it by selling its asset, or whether the company has the ability to pay its debts when it's mature. Okay, so what it says here is that if expenses comes from operation, okay, so uh that will be most preferable, okay, rather than the financing of expenditure coming from the investing and financing activities. So actually it depends, okay, on the purpose of the internal and external users. But uh, usually they will look at the standings, okay, according to the activities. Okay, so expenses inflows that is bigger, okay, from the operating activities is preferred, okay, more than from sources from investment and also financing. So because investing shows that a lot of money uh, is being paid out, okay, maybe to buy assets, or maybe money is used, okay, in investing in another company. And for financing, it shows that the company is getting the source of inflows from debts. Okay, so they do not, so most of the decision maker, they do not prefer, okay, sources of inflows or outflows coming from those two sections. Okay, so they prefer more on the operation section. Okay, so internal users such as managers use cash flow information to plan day-to-day operating activities, and from that they will make long-term investment decision. Okay, for external users, okay, they especially want to assess a company's ability to take advantage of new business opportunity. So their purpose will be different. Okay, so for internal users, they will look more on operating activities and then consider in making investment decision. But for external users, they want to know, they look more on the investment section, okay, because they want to know if there is any new business opportunities. Okay, so this depends on their purpose. Okay, so there are a few more purpose of cash flow information that can be used, okay, by the internal and the external users. Okay, so some of them are listed here. Okay, so prediction of future cash flow from past cash flow performance. Okay, showing the source where cash came from and how it was spent. Okay, it can also be used in evaluating management decision in generating and using cash. Okay. It can report, okay, why cash increase or decrease during the period. So you can see where cash comes from and cash goes out. So why does it increase? Okay, because of what activity? Okay, so why it increase or why it decrease? So which activities okay, so which activities cause those increases and decreases during the period? Okay, and it can also help whether the company can pay dividends to stockholders, or whether they are required to make more payments of interest and settlement of debts to creditors. Okay, it can show the relationship of net income, okay, with the business cash flow. Okay, so you can see the net income relationship with cash flow when you prepare, okay, the operating section, okay, using the um indirect method. Okay, so the usefulness of cash flow information is that it can help it has the ability it has the ability to give information to know which uh, okay, what amount of cash flow is adequate, for a certain period. Okay. Ability to generate adequate cash flow is a significant performance dimension. Okay, so cash flow information clarifies the dynamics of short-term liquidity and also long-term solvency. Okay, so because we're looking at the cash inflows and outflows at a certain period, so we can see the short-term liquidity, and also in efficiency in use, or investment or financing operating in the activities, and they can also help in determining the long-term solvency. Okay, so we can see from period to period, the changes of the cash flow. So this can help in forecasting the long-term solvency. Okay, so cash flow information is an essential input for economic decision models. Okay, so these are other usefulness of cash flow information. So it can help the ability can have can help in assessing the ability of a firm managing cash flows. Okay, the ability to generate cash through its operation, to meet its obligation and its dividend policy, to provide effectiveness of to provide information whether the company or the organization is actually effectively converting its revenue to cash, and also uh, information to estimate or anticipate any additional financing. Okay, so usually in cash flow, we will use both cash and cash equivalent. Okay, so cash is the real cash. Okay, so cash equivalents, uh, for examples, are like marketable securities. Okay, inventories that can be converted into cash. Okay, so the statement of cash flow explains the differences between the beginning and the ending balances of the cash and cash equivalents. Okay, so what are considered as cash and cash equivalent? Okay, so cash on hand, cash in bank is cash. Okay, for cash equivalents, it is actually highly liquid short-term investment. Okay, that can be converted into cash with little delay. Okay, for instance, like money market investment, government treasury bills, inventories, and etc. Okay, so marketable securities are not cash equivalent. Okay, so things that can be converted into cash, and having high liquidity, so that is cash equivalent. Okay, so that's the end of part 1. Okay, so in part 2 we will